Hey, what's going on, guys? This is Terrence Ray, and I'm back at you with another weekly stock market update. Right now, the SPX is showing an expected move for the week of 76 bucks. And it just goes to show when I was getting ready to pre-planning for the show, it was showing $70. So literally, like within a span of maybe 10 minutes of me getting ready, it has moved. It's showing $76 now. It was 70 when I got ready to record the video. So I will probably adjust these by about $6. But that's just showing you that volatility is actually being pumped into the option market, which is saying to us that it's expecting a little bit more of a larger move than it was earlier. So the market is continuously moving, and that also illustrates that risk is already in the prices of options. So even if you don't trade options and you just someone that you're just an investor buying stock, you really it lets you know that something is going on in the world, right? I can look at a chart and I can tell when news is happening just by the size of candles and the pricing of options without actually knowing the news. Now, with that being said, let's take a look at the VIX, which is the volatility of the S&P 500. And here are some fib levels that I have for the VIX. And you can see that it got all the way up to this level right here. We had one more to go, or excuse me, I'm sorry, two more. I don't count the last one right here, but generally this one right here is the one that where I say that it hit like its peak of its move. And the VIX has subsided since hitting the 2618. So we may not get any more and it has retracted a lot, right? So you're saying, well, what's the significance of that? If I still believe that the VIX is going to go higher, which I do think that it still can. If I think that it's going to go higher to take out this previous high here or this high here, then that means that we got to get some more sell side action. And with earnings coming up, we got Amazon earnings coming up this week. We also have Apple. There are more earnings coming up, but those are the ones that I think will move the S&P 500 to give us this larger move in the VIX. If you're a seller, I would be personally, I am a seller of options right now as opposed to buying them when volatility is higher, and it's higher than it has been. Then you don't want to be buying options because even if you're right, then you still may not make money. Um, and I'll give you an example of that towards the end of the video. Stick around. I'll show you a live trade I put on Friday. And we'll talk about it. Now let's go take a look at the QQQ, and then I will talk about why. Let's see. We'll get into why I still think that we're gonna get a little bit more of a down move, at least in the Nasdaq. So you can see right here, I have levels. Let's hide these indicators, make it easier to see. And I did this basically on the 1 hour. So we had our initial move here, our down move. This would have been an Elliott wave. This would have been the first wave. Your pullback is your second wave, right? And then here's the three. The third wave. That's the one you want to be in. You make the most money the fastest when you're in that. And you can see it came all the way down here to this level right here, the 2618, the same like in the VIX. And then it went back up. We got a retracement. So if I was to go back over to the VIX, it looks similar to this, where it hit this level and it retraced. Excuse me. Now this is your fourth wave. Um, and when you get this wave right here, your retracement wave, you generally don't know how long the retracement wave is going to be. and it should last about as long as it took for these 3 to take place. Now this is down each candlestick is an hour. And this is our retracement wave, and it's just going back up a little bit. Now, it could possibly go up in here to this level right here. So maybe to start out the week, maybe Monday, we get a little drift higher, maybe. Um, and then maybe Tuesday come earnings time for Amazon, I think it is. And I think Apple is maybe on Thursday or vice versa. I can't remember. But we may get a move either way. So when I put my indicators back on, one way of being able to tell when the end of a move is coming, or like you could be towards the end, whether it be to the downside or the up, you look for divergence on a oscillator. That's why I always have some form of oscillator on there just to measure out momentum. And you can see from here to here, here's this oscillator here, this squeeze oscillator. And you can see from here to here, you can see that we have divergence. So basically, the oscillator is showing that it's slowing down, price action went higher. Generally, when I see that, I start to look for a the market to change directions. So I do think that we should get another down move in the Nasdaq. And if we get a down move in the Nasdaq, then we'll get that same thing also in the SPY, also in the diamonds, which is the ETF of the Dow, and the IWM, which is the ETF of the Russell. So I'm still bear. I'm not buying this little retracement that we've had the past couple of days in the market. Let's take everything off and let's just look at it. So we basically had this little area of consolidation up here. We had a nice down move, and now we're getting a retracement off of this down move, right? And I still think we'll get another push lower. So, and one of the reasons why I think that is basically I think the VIX is going to go higher. And based off my analysis, I think the Qs should go lower. Now, let's go take a look at Amazon. I'm going to show you something similar in Amazon. Let's bring back up. Amazon actually fulfilled from here. It hit, see how it hit every level on this intraday chart. Now, actually, I talked about this in one of my previous videos before the um, right when it was around this area that I thought that it would continue to go down, and it did. We got this move. Now we're gonna have earnings in Amazon on Tuesday. Now, with this being completed, I'll go ahead and remove this drawing. I don't need this here anymore. I'm gonna go back out to a daily, and then this is how I can. I'm just talking you guys through how I do analysis. Now, if you look from here, you will see these candlesticks low. So you had here was the top. You had a low, a lower low, 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 right? Then you had a pullback. So on the daily, I would do something like this. Now for the daily, I'm gonna go from high to low, right? Now you see it pull back and it hit right in here between 38.2 and 61.8. That's my zone. Now once it gets into there, if it comes back down and takes out this low, which it did, that's showing me another. Now we're instead of looking at the wave analysis on the intraday, now I do something on the daily. Now with earnings, we can get anything can happen with earnings. That's one thing about earnings. I've had stuff drawn up and earnings just come blow all of it out. Just change it all. Now we got this up before earnings. Now I think Amazon will um fulfill this and go all the way down to 115. I doubt it. I doubt it very seriously. But I wouldn't be surprised if earnings was good or it sounded, it sound good and it continued to go lower. Because the one of the things about the charts, Price action is telling you something. Like price action is telling us, like for some reason, it started to go down. Now we people can speculate why they think it's going down or why it started going down, but something is being priced in to Amazon before these earnings come out. So we got a down move that has already started, but earnings hasn't even come out yet. Maybe something got leaked. Who knows? But I'm telling you, price action is always king. I want to what are the is price action saying? I don't care what's being said on TV. I don't care what the earnings are. I don't care about any of that. Now, a lot of that stuff, like good stocks, will play out if you're looking at something on a weekly, maybe even a monthly chart. Good stocks generally tend to continue to look good, right? But when you're looking at something on a daily and below, anything can happen from there to, from here to here. Like anything can happen. So I may even put on an earnings trade. So make sure you guys are you sticking around. I may put on a cheap trade based upon this chart. I think that Amazon should go a little lower. At least come back down here. Take a look at this 165 right around in here, maybe even 155. We'll see. Let's take a look at Apple with earnings on the second. Apple. Now the thing about Apple's chart, if we zoom, this is a year chart, a daily. We can see that Apple has already been beaten up. So basically, you can see. I don't know if I heard on Friday or Thursday, I was listening to a podcast, something like that. Like I think Apple has been overtaken as the number one like cell phone provider or whatever like Android or Samsung, whatever. You know, with that, and you can see that in this chart. Basically, I think Samsung has overtaken iPhone or whatever. Their sales haven't been growing like they used to, right? And if you look at the chart is telling you that. Even before I heard that news, hey, I could see it. Something going on from here to here. Now, whatever news comes out on the second, is it already priced in? That's what we have to ask ourselves. Now I'm going out. This is a 3-year chart. So is it already priced in? Like have we all the bad news we already know about? So with that being said, if we were to see Apple to start going up again or something like that, because the bad news is already priced in. Like we've already got the bad news in the price action before the earnings come out on the second. Now, if it's worse, you could see I wouldn't be surprised to see a nothing burger in Apple, is what I'm really saying. I'm saying that we've already seen the move happen before the news has come out. And that's what when you hear them on TV saying it's already priced in, that's what they're basically saying. You can see the bad news on the chart. And I want to talk about snow. I put a trade on it. Snow on Friday. I talked about it in Friday's video. I even posted the trade. You can see snow. Snow has been beaten down. And all I did was come on here. I'm gonna remove this highlighted area, make it easier to see. And basically, I seen we got 3 candlesticks. We got one here, gapped up here, gapped up here. So 3 straight up candlesticks, a pullback, like an a doji candle and a gap higher. And all I did was throw some fibs on. And you can see right here it stopped at the 100. And at the very least, I think we'll get another move, push higher to get up here to around 166. Now, when you see something like that, there are different ways of trading it. Like you can buy shares if you want. Um, if I did buy shares, I definitely would have sold a call against it, maybe a covered call. I would not buy a call option. Like I said, I actually went to the May monthly instead of going to the June monthly because I think we'll get a faster move on this. Since I think it's going to get to 166, if I was going to buy an option, I would have bought this call option right here at 165. But excuse me, with an IV rank, of 51, I wouldn't want to buy a call because if volatility out of this comes out of these options, the market could go up and then I could get a vol crush. So basically, volatility comes out and the market goes up. I'd make some money, but vol would come out and make the options cheaper. Instead of them going up exponentially in value, it's possible to lose a little bit of value because of the vol. And that's what they call vol crush in options. So when volatility gets high, options get more expensive. So when those things happen, I like to sell them. So all I did was sell a put spread. I sold the 150, bought the 145. Now, the market, I can make money a couple ways. The market can stay where it's at. Right? The market closed in this at what? 158.13. So I sold the 150. I'm way back here. So in the next 19 days, snow can literally come here, drift around, come here, drift around. As long as it don't come back past this area, it can stay here and I can make money on this trade. I don't need it to go up. For the next 19 days, if it was to do that, then I'd keep the 127. Now, if the option goes up in value, goes up, or the price action was to go up, I can make money that way as well. You don't make as much money as you would buying options, but it's hard to be right directionally all the time. That's a hard game to play. So this game right here is basically, yeah, it's a bullish trade, but it's basically bullish to neutral. So I have a lot of leeway and there are a lot of things that I can defend, ways I can defend this trade. And so continue to watch. And if I get tested down here, then you'll see how I will defend the trade. And I'll do that and I'll post it. Make sure you guys are checking the community notes and community page because that's sometimes I'll just post like a chart, with something I'm looking at. Sometimes if I do a trade, I might post it on there just show you what I'm doing so you guys can see. So make sure you hit the like the video, subscribe, and have that bell notification on because a lot of times I don't plan live videos, but I'll go live if I see something going on. And I think tomorrow I may do a live video right around 10 o'clock, 10:05, but I'll put it on here so you guys can see when I'm gonna do it. And with that, guys, I'm gonna be out. Peace.